Wait, what? I can do that? This is Eric Bell with Wait, what? Financial matters that matter for business and the people that own them. Welcome to this episode of Wait, What? Financial Matters That Matter. I'm fortunate today to have Cedric Ferrell with me, a good friend of mine from the Ferrell Group Real Estate Services. There's three words that come into mind when I meet with Cedric, and everybody who knows him says the same thing: quality, professionalism, and he has experience. Graduate from Purdue, he's a Boilermaker. He also went to SMU, Southern Methodist University, and has his master's degree from there. He is constantly working with people on investment properties. I thought it'd be good to have him today to talk about investment properties and how they have an effect on the business owner in terms of selling them and also buying them to grow their business. Thanks for being with us, Cedric.
Thank you for having me, Eric. First of all, before we get started, I'd really like to say I've listened to several of your episodes, and they are really good. And I encourage a lot of people to subscribe and listen also.
That's why I said you're going to be the catalyst, man, to me jumping off there. I appreciate it. Glad you're here. Can you tell our listeners more about what we're looking at in terms of the commercial real estate investment space right now? What's going on with that environment?
You know, it's a great question, especially today in this environment when we have a lot of uncertainty. Specifically, we're familiar with the coronavirus that's going around now, and there's a lot of uncertainty with that in the markets, a lot of uncertainty with that with the school system, and pretty much everyone that's involved across the entire globe. So that's just kind of uncertainty. The other uncertainty that we have going on in 2020 is the election that's coming up, and we're not sure which direction we're going. So there's more or less a pause when it comes to investment on a large scale, especially for the individual investors who are primarily I work with.
You know, that brings me to another question I had. Well, if you take a step back, can you just define to me what commercial investment real estate is? Because a lot of people think it's one thing, but it's not.
Great question. Yep. Investment real estate is typically you have an asset, and as an individual or as an entity, you want a return on that asset, and it requires capital in order to do it. So when you think of investment real estate versus the residential real estate, what a lot of people think about, you have the multifamily, you have office, you have industrial buildings, you have retail locations, and you also have hotels, which need capital in order to be built and to occupy and also to operate. And in order to do that, someone has to invest in that. And that's where the investment portion comes from. If I give you $1 to build this hotel, I expect to get a percentage back from that, or at least a return on that. And that's what investment sales is. You'll find people who specialize because they really understand a certain asset and they'll invest in that, or they have a broad portfolio that's diversified and they'll invest in that. But at the end of the day, it's you want to put $1 in and get more than $1 out.
You know, I'm hearing that there's a lot of issues in terms of finding properties that you really want to invest in right now. Does that seem to be true for you, or what's going on?
It depends. Investment is a matter from a personal standpoint. Individuals have a personal idea as to what they want to invest in, and they also have a financial idea as to what they want to invest in. And with that said, we live here in California, and if you have a significant financial return or a significant financial advantage that you want to take, California may or may not be the best place for you to be able to do that. However, if you like to drive by your building and see it and say, that's mine, I bought that one, and this one, and you can drive to it, then it's a great place to invest because you will gain some appreciation when it comes to that.
You know, speaking of that, when you talk about California and outside of California, are there any hot spots outside of California, but within the United States that you're looking at, or some of your clients are looking at?
Yeah, my clients are looking at a variety of places. And the first place that you think about, not only from a standpoint of investing from California, but also actually physically moving their businesses to certain locations. And those are states that have a low to no state income tax. And so when you think about those types of returns, when you think about where the jobs are going from an economic standpoint, Texas is there, Tennessee is there. We have some people looking in Indiana. Florida is a significant interest right now. Washington is a little bit more oversaturated, but there was some interest in the Washington area.
You know I was at the mall the other day, and it was kind of late. It's probably like 8:00, but there was nobody in the mall. And I'm just wondering there was very few people. The stores, you walk by the stores, there was no one in them buying anything, but there were clerks there. I'm just wondering how e-commerce and the online purchasing, how's that affect investment properties or commercial real estate?
Great question. Great question. Well, Amazon's kind of has a hold on the market when it comes to the last mile and individuals. It seems like every day I come home, I have a package on my door that has Amazon on, or the Amazon guy is pulling out of the driveway.
Did you order it?
No.
That's what I figured. Same thing in my house. Yeah.
Unfortunately, half the packages have my name on them. But
that's right.
Yeah, exactly. Right. I didn't order them. So Amazon has a significant grasp on that. And I think now with the coronavirus going around, we may even see more of that with people not leaving their homes and getting things delivered to them. With that said, malls themselves, what we're seeing from a retail standpoint is that the malls that are class A, maybe B, B+, which are the premier type locations, are doing really well. This time of year, malls are a little bit slower than other times of year. If you do have a mall, and we see some of the Simons and other large mall investors moving away from areas that have maybe the B- C locations, and those are getting shuttered and really being repurposed for a variety of different things, anything from storage facilities to gyms to parsing out a Sears location and making it a multiple use type operation.
Okay, so malls will still have. I just happen to be there, I guess, on a bad day. But Christmas time,
bad time of year. Also,
Christmas time is always there's always a bunch of people at the mall.
Exactly. Well, that's where they make the majority of their money. However, it's still from a standpoint of sales go. Amazon has a really good foothold on that, and so you see a lot more growth in the industrial real estate sector, more so than the retail.
You know, in this low interest rate environment, it seems like it's a good opportunity to buy things, or at least get some money to buy some properties or commercial properties and investment properties.
Absolutely. And it's, as I mentioned before, it's a personal and a financial decision for individuals to invest in real estate. But with the interest rates as low as they are, and I've seen commercial rates now below 3.5%, the attraction is really the cash on cash return from these things. And so as you can leverage an asset and buy it, and the cost of buying or borrowing the money on that, whether it's 60, 70% of the asset itself, the cost of borrowing that is significantly lower than what it was even a year ago. So that's very attractive for a lot of people. What sellers and owners are very savvy and understanding, because the interest rates are low, the prices still aren't dropping as much. At the end of the day, it's that old economics thing that we had when we were in school, and that's supply and demand.
Old economics, that's your day. That's not my day. So. Back to brick and mortar, though, I was with a fashion designer the other day, and he said, Eric, everybody buys my stuff based on who the influencers are that are wearing it. So he said, I will never own a store again. He goes, I'm going to use influencers, have them wear my clothes. They'll do a post through Instagram. And before you know it, I got stuff selling off the shelves because they posted it. So to me, it kind of seems like malls are going to be a thing of the past regardless of Christmas time. I mean, it's always good to go there on Christmas or, different times of the year, but it just seems like the traffic through a mall is just different. Mainly it's there for restaurants.
I think you nailed it in that the traffic is different. If you've also may have noticed that there are things that they call pop-up stores now and pop-up locations.
I haven't seen that.
And what those typically are, unless you use your friend's location, if he does have a high influence and he has a recognized brand, what you'll see is that whether it's seasonal, and Coachella has been postponed, but if it's seasonal or something around an event where his clients are attracted to that, they very well may pop up a store for a period of time and have that property or have that material, whatever that is, being sold if it's popular at that time. So around the malls, I'll use the Halloween store as an example. That would be an excellent example of a pop-up store where they pop up for the Halloween season and then they're gone again. And so you'll still see some of that same traction during that time of year.
Cedric, I kind of glazed over your background, but can you tell me professionally what you've done in the past?
Sure.
Professional background?
Sure. I think this is like a hour long show. I didn't know.
No. You only got 2 minutes.
Okay, great. Well, I spent,
now you got one.
Exactly. Well, I spent almost 15 years in the consumer packaged goods arena when I graduated from undergraduate school. And actually, while I was in graduate school, I also worked for Frito-Lay. And I worked my way up from multiple headquarters through here is where I landed 25 years ago with Mars. And I worked at their headquarters in downtown or just outside of downtown Los Angeles. And eventually I got the entrepreneurial bug, and I was drawn away to work for a marketing company. And we did that, and I ran that company for about 5 or 6 years. And then I went out on my own and sold franchises for about 8 years or so. And then life hit, and I went back to the corporate world and worked for waste management prior to getting into real estate about 8 years ago. And I've worked in the real estate arena, both on the residential and the commercial investment sales, and also tenant rep front.
Life always messes up the best laid plans, you know?
I think we make plans and then God laughs at them.
That's right. Changes up on you. You know, you had a return on equity series. Can you tell our listeners more about that, what you're working on?
Absolutely. Absolutely. I talked earlier about the return on cash, and that is how much does it cost in order for you to borrow money. What a lot of investors, especially here in California, and it's primarily targeted for investors that have had their real estate for a long period of time in California, they are very slow when it comes to increasing their rents. And we do have rent caps in place. However, the increase in rents over the last 10 years have been less than what the cap is. And what we find out is that the income can't keep up with the value of the asset. So if you have an asset that was worth $1 million 15 years ago, it very well may be worth $1.8 million. And your income now is not keeping up with that. And what I did was I took a step back and wanted to figure out how to become more or less the Pied Piper when it comes to at least getting this message out. So I put together a series in bite-sized steps. And the first step of that series is I'm calling 101, is return on equity, real estate return on equity. And that 101 is at least have an idea as to what your return on your apartment is, at least have an idea as to what the return is from an equity standpoint on your storage facility. And once you have an idea, 201 was designed around if you were interested in either refinancing and taking some of that capital out and redeploying it, how might you do that? Or if you were interested in selling your property, how would you get a loan, especially in this environment, and move down the road or maybe move into Texas or Tennessee or someplace else to invest to get both a higher cash flow and a higher return on that asset, more or less making your asset work a lot harder for you. And then 301, which is the series that we had last week, was primarily based on what types of things would you invest in. And we had a specialist that came in and spoke about net leases. But there's also other assets that individuals can invest in, like Delaware statutory trusts. There's apartments and other assets outside of California that they can invest in. And fortunately, and thank you for offering to do my 401 series. And that series is around, now that you have an increase in income, how do you protect that as you retire or work yourself into retirement? So Eric Bell is going to come and speak about some of the zero tax advantage things you may be able to take advantage of as you retire. And then 501 is the last part of that series. And with that, I'm bringing everything back together just to bring the story together, and then wash, rinse, and repeat.
Well, you know, I always believe in tax-free. So,
right.
Yep. Well, I appreciate you being on today, Cedric. You know, let me take a step back, though, and ask you about storage facilities. I've noticed they've been the rage here recently. A lot of people are trying to get into those. And what's behind that?
The idea behind storage facilities is it's simple from a standpoint as to the asset itself. You buy a facility, you put it in the right location, you have the right demographics, you have the right demand, and you don't have phone calls about the toilet not working or tenants that need to be evicted or things of that nature. So it's a combination of you, again, deploying your asset, finding the right location, finding the right demand for that, and then providing the service. And it's getting a lot more sophisticated. What's been attractive for a lot of individuals like myself, who's also interested in investing in storage facilities, is that about 80%, about 75-80% of the industry is owned by mom and pop, which means 2 or 3 locations, and that's it. And then we also know about the big REITs, the public storage, the extra storages, and those locations. So it's opportunity for improvement because they haven't necessarily been run like institutions.
Wow. You know, Cedric, did I miss anything, or is there any questions or answers that you might have for the listeners that you might want to give us some more information on before we sign off?
No, I appreciate you taking the time to have me on here. This is an honor to be able to talk about real estate. As I said, being the Pied Piper of real estate return on equity, that is. And so I appreciate that. I think the main thing for all of us is to basically be aware of what's going on from an economic standpoint and then take advantage of that. And that doesn't necessarily mean risky. It just means the more that you know, the more that you can capitalize on what opportunities are. And I do believe that even in this environment of uncertainty, there are opportunities to capitalize on.
Well, I think your return on equity series is going to be a big differentiator between you and all the other people that you compete with out there in the market. It's going to be
the message gets out, and thank you.
Oh yeah, it's going to be good. To get hold of Cedric, please give me a call at area code 714-643-2500, and my extension is 420. Thanks for being on, Cedric.
Thank you for having me.